Welcome, everybody, to the SNN Network Canada virtual event. I'm your host, Robert Kraft. And on behalf of SNN Network, I'd like to thank you all for joining us today at the event and for our upcoming panel that I'd like to introduce you to right now. This panel is titled Artificial Intelligence and Big Data. And the goal here is to showcase a little bit more about what's going on in this space, in the sectors, not only from folks that have been following it and are in it firsthand, but someone to give us a little bit of perspective. And guiding us on that journey today is our moderator, Ralph Garcia, managing partner from Focus Merchant Group. Ralph, take it away.
Thank you, Bobby. And I'd like to welcome everyone this morning to the AI and Big Data panel. As Bobby said, I'll be your moderator, and I think you're in for the next 30 to 45 minutes. We'll get a nice overview of some leading microcap companies in the Canadian market that are set to show some explosive growth here as they participate in the growth in the AI industry. I mean, if you look at most industry estimates, the industries should increase tenfold by 2030, exceeding 300 billion in revenue across software, hardware, and IT services. And as AI becomes pervasive across all industries, today's panel will focus on the impact of AI on several industries. We're going to look at advertising, marketing, specifically within automotive, financial services, and retail. We'll look at the changing industry on the real estate side, trying to modernize and democratize the archaic infrastructure that was real estate and the data associated with that sector. And then oil and gas, and we'll look at some other infrastructure sectors such as water, wastewater, etc. What's interesting about these industries is they all consume significant amounts of data. And the real value of the companies we're going to hear from today is how they turn this data into actionable insights for their customers. And with that, I'd like to introduce the panelists and have them introduce themselves and their companies. And with that, we'll start with Geoff.
Thanks, Ralph. And thanks again for having me on the panel. I'm Geoff Rotstein. I'm the CEO of EQ Works, public company, TSX Venture, EQ under the ticker symbol. And I want to just a little overview about EQ. EQ is a data analytics and intelligence company. We utilize data, machine learning, AI to provide our clients with more complete data sets and more importantly, relevant tool sets that allow them to make strategic decisions that they couldn't do in the past. And what does that mean? It basically means we help our clients understand their customers better. Years ago, we realized database decision-making was going to be essential for today's environment. And we really wanted to give our clients a data advantage as they were to progress and grow. For companies that have their own first-party data, we help them enrich that data to provide a more complete picture of their consumers. And for companies that have been working at a disadvantage because they've had a lack of data, we provide really robust first and third-party data sets and a complete set of tools that help them complete better. Data sets and tools providing companies with a better, complete understanding of their customers. And with a more complete understanding of your customer, in any business or in any vertical, you can engage better, you can grow better, you can sell better, and you can communicate better. So the bottom line is we provide data and tools to allow our companies to grow better.
Thank you, Geoff. Over to you, Brandon.
Ralph, thanks for having us. My name is Brandon Taylor. I'm the president and CEO of OneSoft Solutions. We're a SaaS software company focused, and our solution's called Cognitive Integrity Management. We came out of the Microsoft Accelerator. It was their very first data science and machine learning cohort in 2016. Launched our solution in 2017. Since our last release, which was in October of 2018, it's a mission critical enterprise level SaaS software solution focused specifically on oil and gas. So when we talk about big data, there's roughly about 2.7 million miles of pipeline just in the US alone. Of that, there's about 660,000 of it that's piggable. So, this industry in general has been a pretty laggard industry. It's regulated. And what that means is that these operators have to run these hardware devices in the pipe. It's buried product, whether it's crude or gas is pushing these devices down, and they're measuring the wall thickness. So what our solution does is basically take that data from these hardware tool, which they call pipeline inspection gauges, they have odometers and sensors on them. We ingest all of that data, and they've been doing this literally for decades. We ingest all of that data, we align it all, we classify it. It's never been done in the industry before. So we've actually classified which features they see down the pipe, whether it's a crack, a dent, corrosion, wall loss. And then we manage and monitor those anomalies across an operator's entire pipeline system. Today, we have roughly 150,000 miles under subscription, 100,000 or so as this piggable data. So we're, literally monitoring and watching billions of anomalies on pipelines across operators right now, and that just continues to grow. So really, it's about our mission statement, which is to predict pipeline failures, thereby save lives and protect the environment. And we only believe that you can do that through data science, machine learning, AI kind of things. Most of our operators were like their very first SaaS solution. And quite frankly, a lot of it just was managed before in Microsoft Excel, a lot of manual processes. And we're bringing all of that data into a modern, really intelligent, insightful application that can help them understand that all of these events that we see on a daily basis, okay, another release happened, we're trying to predict where those are going to happen and when they're going to happen.
Excellent. Thank you for that. And over to you, Jordan.
Yeah, thanks, Ralph, for having me. My name is Jordan Ross. I'm the Chief Investment Officer here at Voxtur Analytics, traded on the Toronto Stock Exchange Venture under VXTR. We're listed on the Toronto Stock Exchange, but recently, I would say over the last few years, have really become more of a US company and a US story, because that was the focus of a lot of our growth. And so we are a real estate technology company. We are modernizing a very archaic space, in the sense that a lot of people are still bums in seats and done on paper. So what we're actually doing, and what I mean by modernizing, I'm not sitting here and trying to say we're the next Uber or disrupting the space, because we need to move as quick as our clients are and continue to push them forward into a more digital age, because that is where we are. And with the veracity and the quality of the data out there, we now have the ability to push these solutions. And quite frankly, unfortunately, with the personal side effects and tragedies with respect to COVID-19, it's actually been great for our business, because it's accelerated the development and the adoption of technology in general. And so what we do is we are the true diligence arm for these large lenders, institutions providing mortgages. And so what I mean by diligence, we've been very selective in terms of the platforms that we've built and or acquired. And those platforms are in valuation, or some may refer to it as appraisal, title, which is title insurance, and settlement to actually close the transaction. And then really our unique and competitive differentiator that seems to be lost on most is a property tax assessment validated data point. And so combined, we provide those 3 data points into our clients, being the lenders, and you can't transact any loan without those 3 data points. And so it is also important to know, we not only do it at the start, so the origination, or some may refer to it in the primary market, but we continue to provide these services by leveraging the data all the way through, from servicing the loans to trading the loans, to residential mortgage-backed securities for the hedge funds that are buying and selling those portfolio of loans, all the way into default and foreclose when the loans are being foreclosed on by the banks. And so we provide services into each of those multi-billion-dollar segments in and of themselves. And so the last thing I would say is about us is we've taken a very stern view with respect to taking the data, aggregating, normalizing the data, powering that platform with that data from an enterprise level. And so we have a valuation platform, we have a title platform, we have a tax platform, and they all use and pull from the enterprise database, or the data lake, some call it. But they use data in different ways depending on what the service is being provided. So we're really a data-driven company that's modernizing the process to transact a mortgage or a loan within the real estate finance ecosystem.
That was great. Thank you for the intros, gentlemen. And just before we start in the panel discussion, from a disclosure point of view, I am a shareholder of EQ and do not own any shares of OneSoft or Voxtur. Although I think after this session, I'll probably be an owner of a shareholder of all three, but just again, for disclosure purposes. So let's start the discussion here, and I'll start with Geoff. EQ has analyzed petabytes of data over the last several years for more than 300 million mobile devices. And you collect more than 260 terabytes of data monthly. I mean, how is EQ ingesting this amount of data? And then how do you let your customers access that data to gain valuable insights that weren't available before? As was mentioned earlier, guys were either using Excel spreadsheets or trying to do these things, manually. How are you managing this amount of data?
So let me one step back into sort of where we came out of, because I think what's really interesting about what we're doing is we're satisfying a need and solving a problem that we found clients asking us for, in our previous iteration, if you go back 5 or 6 years. So we kind of evolved out of the ad tech landscape. We are helping our clients, with different kinds of media, whether it be social media, paid media, different things organically, but different ways for them to communicate with and connect with their customers, their audiences better. So they said, how can we do that? And we started working with them. And then as they started to ask more questions, we did our own analysis and we said, well, here's a really good campaign, but here's a great campaign. What's the difference? And we looked at the difference between the really good and the great. The difference was data. The more data we had, the better we could target, the better we could identify, the better we could understand. And as a result, the better we could communicate the value proposition of our clients to their customers. So we started going down that path and collecting data. And because we were in the ad tech world and we initially built our own DSP, which is a media buying platform, we were seeing hundreds of thousands of media buying opportunities a second. And just with that, to make that technology grow and that technology function, we needed to have a very scalable and a very robust way to absorb data, ingest data, and then execute. Because, with doing those transactions, we had anywhere from a third of a second to a half a second to actually execute. So we had built the system to be able to absorb. As we were collecting more data, we started to ingest all those data sets and very quickly realized that there was so much more data that we could capture to make our analysis, our analytics that much more significant. So we started talking to companies with respect to mortgage information, with respect to insurance information, automotive information, consumer purchasing. We just built a pipeline so that we could absorb all of these different data sets from our clients, from our partners, from other third parties, that we could bring it all into the ecosystem that we built. And in addition to having a media buying platform, as we were going through this data ingestion opportunity and data ingestion exercise, we built this data analytics and insights tool called Locus, which is how we branded it, which allows us to absorb these huge quantities of information very quickly and very efficiently. And what's been working to our favor over the last, call it 5 or 6 years, has been that storage is cheap. So the ability to collect, as long as you have a good pipe, storage becomes cheap. The real difficult thing is computing that data so that we can get some real valuable insights out of that. So again, everything we collect is anonymized, everything we collect, there's no PII that ever enters our system, so we're always very careful with that. We have this geospatial data set that we've collected, which is, again, when you're talking about the terabytes and terabytes of information that we get, we bring in the geospatial, we mix it, we match it, and we've built a very effective platform through this Locus platform that allows us to really query that data to come up with insights and ideas and opportunities that weren't available in the past. And I'll just, one quick example of that. We were doing some work for a big retail store, and they came to us and they said, we have these stores that are performing well and these stores that aren't performing well. We don't understand why. And we kind of came up to them and said, we have a data system and we've got an opportunity that we can collect data sets and try to analyze the differences. And they initially looked at us and they said, well, listen, data's our business. I have a loyalty system. I have a POS system. I know the inventory. I know the shrinkage. He gave me the 90 things that they do to collect data. And I was just saying, you're right. We will never have that deep a data set within your store or within your stores as you do. And we don't profess to. But as soon as your customers leave your store, you go blind with respect to the data that you capture. And that's where we come in. Because when you go blind and can't be collecting any more data, we step up and we'd say, well, did you know that these people in your good stores shop at your store twice a week and basically only visit one other competitor? But in the bad stores, they might shop twice a week, but they go to your competitors twice, not once. Did you know that the people are moving? They have to travel distance. You know, the travel distance from their home to your store is longer on average than it should be. Did you know that the people that you're talking to, you know, have these hobbies, these habits? We gave them a much more complete picture, which allowed them to understand the customer better and do a whole deep analysis on the good stores versus the bad stores, and allowed them to take action. And again, if they were just relying on their own data sets, they'd never be able to get that deep with the insights. And that's something that our Locus platform and our robust data collection can find those relationships and those causalities that they haven't been able to do in the past.
Okay, excellent. So if you look at EQ, Brandon, I mean, they're tracking devices and movement from store to store of shoppers, et cetera. You're tracking a totally different element here, whether it's oil, gas, et cetera, flowing through a pipe. You've talked in the past about the access you have to your client's data, either downstream, midstream, et cetera, and using that as a competitive moat. I mean, can you elaborate on, as you build this data, this pipeline data, et cetera, and how you've used that sort of competitively in the oil and gas side, and as you move into other sectors?
Yeah. So one of the things that's a probably pretty common theme, I would suspect, across all kind of machine learning, AI type solutions like ours, is that, you know, it is about data. And for us, when we first engaged on this endeavor and this journey and started actually building our platform, you know, our clients are Fortune 500, Fortune 100, in one case, a super major. So they're very sophisticated organizations, really high caliber engineering, you know, lots of decades of research going around, you know, what kind of pipe, all that kind of stuff. But operationally is where you land in there and, you know, they want to go all the way to Z when their data is not even in position A, right? So we spent the first couple of years of our lives literally writing ingestion algorithms to basically do that, just, you know, ingest it, normalize it. And that's really kind of the first time, as I've mentioned, is born in the cloud solution. And one of the very first cloud solutions in these operators is that, you know, we go to industry events and we get other operators that have been in this industry for decades. And, you know, how do you get operator A to give you their data? And, you know, where we're tool agnostic, vendor agnostic, it's really the first time that we've been able to aggregate data across operators. And there's a lot of benefit for that. We call that concurrent or shared learning. And that's the reason, is because if operator A learns something and we build an algorithm around it, as soon as we deploy that in our solution, operator B, C, and D automatically get that learning, right? So it's really fabulous from that perspective. And as you can anticipate, being in this industry, there's just a ton of white space, you know. So we started with that, you know, pipeline inspection data, which is called inline. They weren't actually at the point where they go to excavations on the repairs. They were not linking that back. And we ran this tool. So we had an anomaly here. We're telling them how much it's growing. They go dig it, repair it. Some of these are immediate, you know, like only 20% of the pipes left. There's going to be an imminent threat here. You got to go fix it. And then they go send an excavation crew out there and repair it. And they weren't linking that data. Our solution now links that data. So we can say, hey, how many digs did you do? Which, by the way, can be very expensive. If you're running a pipe down the middle of LA, that might cost you $150,000 just to dig a 3-foot hole, right? As you can appreciate. So to stop one of those is a big deal. So we've linked that data, and now we're bringing in all kinds of other data sets, right? We just recently, you know, risk is a huge thing in the industry. And up to this point, a lot of operators were running what they call index-based or qualitative risk, and they're moving now that we got data. It's all about the data. We can start doing probabilistic and quantitative risk models. And there's models already in place. The problem has always been about the data. You can't run a probabilistic model unless you have data. I mean, that's just the net of it. So we're now building those risk models in our solution so we can get to probabilistic, quantitative, real risk models on what the real threat of the pipeline looks like. And that all requires just a good source of data. And we've got an engine in place to do that. That's what's probably most exciting.
Okay, excellent. So Jordan, if we look at, I mean, EQ and Brandon and OneSoft, you know, they've built these platforms and collected this data organically over the years. You know, Voxtur, you guys have used strategic M&A to build your technology-enabled platform for the real estate sector, and it spans tax appraisal and settlement services. Can you briefly go over the recent acquisitions you've done over the last year or so and highlight the capabilities and data sets of sort of each of those platforms that you've brought in, and then how you guys are using AI to sort of cross-sell and upsell across those various platforms?
Yeah, it's a great question, Ralph. I mean, listen, I think we've definitely been very active by way of acquisition, but ultimately, I think, you know, and that's by nature, quite frankly. You know, we're a high growth company, and you know, there's always that fine line between organic growth and inorganic growth. But I think it's first, you know, I think it would be important or imperative for me to share kind of the way we view M&A first, right? There's three non-negotiable characteristics that we have when it comes to acquisitions. One of which, it has to be real estate technology. We're a real estate tech company, it's got to be that way. Secondly, it's got to be synergistic. And then thirdly, from a valuation standpoint, it has to be accretive in value. And so that's really, really important to know. And we also structure them, you know, the kind of fourth main thing is that we structure them in the sense that we give a cash, an earnout, and stock. That way it ensures there's longevity with the team and or the platform. And also there's a strong incentivization to continue to provide, you know, and give shareholder value. You're no longer a private company anymore and you get to do whatever you want. You know, there's a larger audience that you need to answer to. But yeah, for sure. The two, I guess I'll highlight two, since I think we've done about 5 over the last, just within 2021 alone. But the two that I would highlight is one, our acquisition called ANOW, which is our valuation or our appraisal platform. And so we did that acquisitions. It was more of a buy versus build scenario in terms of buying the ML and the AI technology that they have. And so what does that exactly mean? You know, ML, you know, is kind of a broad term that a lot of people are throwing around. So more specifically, you know, we're using, or they were using it now as a result of us, we're using ML technology to identify the housing characteristics from the photos taken by the appraisers to or by the inspectors, or in some cases the homeowners themselves as a result of stay-at-home orders. You know, that became generally acceptable and adopted. So we're using that ML technology to validate that the photos they're taken are actually at the property that's being inspected, or the date where the data is being collected, right? At a very granular level from the photos to classify the condition and the quality of each room or the condition of the house in and of itself. Another way to, you know, another one use case is that we're using machine learning on a combination of the MLS data, which is the multiple listing service. That's the sales data that most of us would go on and search when you're looking for homes and what's being listed, public record data, and then ultimately internal data sets to identify the inaccuracies when they're being entered. Because based on geographical influences, some public records data isn't as reliable as others. And the same is it goes for MLS data. Right. And so we're using this technology to normalize, validate, since our industry today is not regulated and there's not necessarily a common format for that data. So that's one where we acquired ANOW, and now we've now as a result acquired that type of technology. On the flip side, we bought a company called Xome, XOME, which meant XO home. And as everyone loves their home, that was the branding which I learned by way of diligence. But we're since gotten rid of that branding, and it's now in the Voxtur family. So Voxtur Valuation is this business. But what was really cool about that is not only did they have 30 MSAs in place with some of the top 10 lenders in the US, but ultimately they had accumulated, and as a result now us, have accumulated 98.2% of all MLS data across the US. That is an absolutely gold mine when it comes to data. And when you think about what are the core data points when it goes into valuing a home, well, I mean, there's multiple, but the core one that you need is the sales data and the historical sales data, because when you're onboarding lenders and you're showing them a valuation, they want to ensure they test that against the historicals. And so historical sales data. And so that was an acquisition where we acquired data sets. ANOW was an acquisition where we acquired, some great machine learning technology. And so that, those are synergistic. They checked all the boxes in the sense that they're synergistic. They allowed us to do our jobs better, cheaper, faster. And ultimately we got them at accretive valuations, which is very hard to do in the private tech world today, when our valuation, it doesn't necessarily trade at the same ways that the venture capitalists are valuing some of these companies. And obviously they're both real estate tech companies. So those were really interesting, cool acquisitions that we've since onboarded, and we're starting to see some great results.
Okay, it's interesting on buying the data sets and that, because as you're trying to test the AI or the machine learning, that's you want to keep feeding it and feeding the algorithms with whatever new data you can get as the algorithms sort of learn what you're trying to derive from a solution perspective or an outcome, I guess, in your particular industries. For Geoff, you recently acquired PayMe, consumer loyalty app whose first party looks at proprietary purchase data for the consumers that have downloaded this app, enables merchants to better understand their customers and spending patterns. How can you use that data set of 100,000 plus users, I guess, or it might be a larger number now, to sort of improve your algorithms, your AI algorithms, some of the machine learning you use on the retail side, insurance or financial services?
Yeah, it's so PayMe is a company that we had talked to and knew about for years before we acquired it. And really at the base level, we were looking at it, it was, who doesn't want to find an easy way to get cash back just doing their everyday purchases? That was the premise of PayMe. It was like, here you go, and if you can card link your card to our app, you get money back just for doing things you would normally do day to day. What a great value proposition. So that's what PayMe does. But for us, when we look at any kind of acquisitions, not too dissimilar to what Jordan mentioned before, we want to make sure that whatever we do is very, very synergistic with our business. We want to make sure that anything we do is going to add value to our business and to our technology and to our data sets. And we saw PayMe as a huge opportunity for data collection on a zero-party basis. Everybody now talks about third-party data, and we all know about the challenges going on with cookies and with IDFAs on mobile devices, and what Apple's doing, what Google's doing. PayMe for us was a very targeted zero-party data, which basically just means consumers know that they're providing their data in exchange for something in return. We're getting these data sets that we can then execute with. So for us, when we saw PayMe, it was an opportunity to capture consumer spending data. And our number now, Ralph, is well north of 100,000. Just want to say it is. We've had some pretty good traction since we acquired it. But what PayMe does for us is it allows us to go, and again, anonymized, aggregate basis, everything PII friendly. What we do is we look at different types of spending patterns so that we can help our clients with competitive analysis. We can help our clients understand attribution, which is in some ways, the same thing that everybody is asking for in terms of if I'm doing some kind of marketing initiative, if I'm doing some type of strategic, campaign, is it working? The days of click-through rates, the days of eyeballs, whatever, we're well past that. We can now prove that, hey, this was spend patterns pre-campaign, and these are spend patterns post-campaign. And we can see the differences, and we can understand sort of how different things work. So for us, we saw PayMe as a way to collect data, consumer purchasing data. The value proposition associated with it, again, is really threefold. To the members that we have that sign up with the app and card link their card, which I would recommend that everybody try, and I'd love any kind of feedback people get. But by downloading the app and card linking your card, you automatically get discounts and cash back through the PayMe app for any merchants that we are affiliated with. So first off, members get cash back just for doing their everyday shopping. Merchants sign up with us because the merchants will come in and say, hey, we need to get more data on our consumers. We want to have a stronger competitive footprint. We want to understand more about what's working, how to engage with them better. And again, are our campaigns working? We can give that kind of feedback, and we give very detailed reporting for them, which gives them huge insights. Again, they couldn't get without this type of interaction. And for us, we've always had data that we've either collected. We use a lot of our clients' data, which they'll give us in order to help with our analysis. We have third-party data sets, either that we purchase or that we partner with. But this is now giving us very much a proprietary data footprint of information of data that can go into all of our various business units. So our main verticals, automotive, insurance, financial services, retail, all of them are looking for different components and different criteria that will allow them to target better, understand better, and execute better. And what we're able to do with the PayMe data sets is really pull these things in so that we can give them way more insight, and it builds and helps build all of the models that we do with respect to engagements and studies for the clients that we've got.
And are you monetizing that data on a consumption basis?
It's
Sorry, go ahead.
Yes, and so yes, it's on a consumption basis. So the more we do, we're able to give it to them. We also sell reports. I mean, the really nice thing about us now is we have this data set that allows us to go and just give clients a report that says, here's what your business looks like relative to your competitors. Or, hey, you just spent $500,000 trying to promote this new brand or this new product. This is, did we see a difference? We've got a sample set now we've got over, I think it's over 500,000, probably 750,000 kind of cards linked right now throughout the country. We can now look at it and say, this is working or this didn't work, and give really precise attribution modeling.
Okay, thank you. I mean, Brandon, you look at EQ, they've sort of built their consumption model on AWS. You've got a strong software background on the Microsoft side. OneSoft's built their platform and solution on Azure and using, BI, their ML engine, their predictive analytics, et cetera. How does your software consumption model, how is it in the oil and gas side, I guess? And if you do move into adjacent sectors or industries, will it be similar on how your, either your downstream or midstream or upstream clients are consuming data? And then will it differ if you move into water or wastewater or other verticals?
Yeah. So, stepping back kind of in the industry itself, right? So when we had our very first client and we gave them our SaaS solution, they'd never seen a SaaS agreement before, right? I think, we started that in January. It took us all the way to September to get through the legal process on that. And we've actually had our customers now use that. It's a subscription model is how we deploy. So there's a monthly subscription for you to just run our solution. And then it's a consumption model that basically is variable based on a couple of things: number of miles of pipe you have, or the number of these tool runs that you load into the solution. And again, since it's regulated, they're on a continuous basis, for their life, basically running these tools. We follow the consumption economic model just from a software deployment perspective as we hit this new white space. So like risk is a good example. That's a module that we're working on right now. And that'll come online. As it comes online and they start checking boxes, they'll start getting consumption economic models on that. And then the other good thing is as we sit down with our customers, there's probably not a time that I've been in a room with them. They said, this is really great. Can you help us with this? Which is typically a whole different department and process within the organization. These are Fortune 500 big organizations with lots of departments within them. And they maybe have started some stuff and they actually give us IP. So then we take that IP. We've really expanded the team over the last year and brought in, we're a traditional, just true straight up software company. It's probably one of the reasons that, it's never really been attempted by a software company. Typically engineers spin out of these and they start an engineering project and then it evolves into some form of that. We're actually bringing in subject matter experts and onboarding them as employees within OneSoft. So now we can really zero in on when we get this new IP and then all the way end to end, right? So we launch another module that we're working on is called Corrosion Management. So that brings in these operators will inject chemical into the pipeline because of corrosivity of the product that's going down. So we can measure chemical, the sampling, all the coupons, and then we can overlay that and correlate that basically to the same line, which tells them a ton of stuff. Do I have internal corrosion, which is typically on an orientation perspective is in certain clock positions. And if I do have internal corrosion, what's causing it? Is it too much chemical? I've not injected enough chemical. Am I running a maintenance pig where it's pushed the product out frequently enough? And every one of these is a cost element for them. So as COVID hit and we all saw what happened to oil, one of the things that's pretty imperative, and we all can talk about digital transformation and we're doing all of this stuff, but the net of it is that we got to show cost savings. And we've done that. We spent about 2 years of basically showing operators that by running our solution, they're going to save, and the average right now is about 10x of what they do today. So we have multiple factors that we plug in that. We actually have math that we can give them and say, you don't believe us, here, you plug in your factors, this is how you're going to save the money. And that's been hugely successful from the perspective that not only are they getting modern digital transformation, they're aggregating all this data and they're predicting where threats might happen, they're actually saving money at the same time of running the solution. So we're getting a lot of traction within the industry and they're starting to talk. It's pretty small within that. So we're super happy about how that's coming along.
Okay, thank you for that. We'll talk financials, I guess, and just some recent contract wins for you guys. For Voxtur, Jordan, you guys reported a great quarter, 24.7 million in revenue, up 37% sequentially. The streets got you doing 98 million Canadian for this year and 230 million or so next year, adding in the acquisitions and then growth with EBITDA margins at that scale of about 10%. If you look at your growth pro forma, bringing in the various acquisitions that you've done, do you need to do further strategic M&A to plug either geographic gaps or technology gaps, or will you just focus on this cross-sell, upsell opportunity and grow organically that way?
Yeah, it's a great question. Listen, as I said earlier, we're a high growth company. Gary Yeoman, who's our executive chairman, the founder of Altus Group, a $3 billion company, took them public. Altus is a byproduct of about 35 acquisitions. I was with Gary at Altus as well, and so was involved in a number of them. So I'd be lying if I said we're never going to stop looking at acquisitions. We're always looking under the hood at everything, because ultimately, to name a Gretzky quote, you miss 100% of the shots you don't take, right? So you're always going to be learning. You're always going to be looking under the hood. Now, that being said, there's always as well a fine line between organic growth and inorganic growth. And ultimately, you have to prove to the street that you're successful at integrating these acquisitions, onboarding these acquisitions, and you're showing growth. And so what we've found ultimately, yes, we've been fairly acquisitive this past year, but that pro forma number that the streets put out there, which I'd be, kind of displeased if we didn't execute on that and then some. But ultimately, that is a pure organic, no acquisitive. There's no acquisitions built into that number. And so how we're getting that organic growth, though, or what I refer to as organic growth, are these acquisitions, these smaller companies that don't necessarily have the balance sheet. They don't have an enterprise sales team. They don't have the ability to onboard because they don't have the dev resources, the farm, either in-house or outsource, or we leverage some offshore development expertise and testing capabilities. They just don't have that expertise. And so by coming into the Voxtur ecosystem, they now have the balance sheet that gets them past vendor management, in these large institutional lender clients, right? They have an enterprise sales force that is strictly focused on closing deals and meeting quotas, right? And that they don't have to, take their dev team off or their product team off one project to jump to another, right? So we have that farm and the ability for them to do what they do best, but exponentially grow them. And that's what I referred to earlier when I said synergistic. They're synergistic in the sense that in the Voxtur ecosystem, we believe they have exponential untapped growth, right? And whether that's a small team, or in our more recent acquisition, we bought, Zone, as I alluded to earlier. They were part of Mr. Cooper, a top 5 mortgage servicer in the US. Well, they were a captive to them. They were being held hostage because they had great technology, but they weren't allowed to be onboarded by others, mainly because they were viewed as a competitor as a result of being just a captive of Mr. Cooper, a much larger entity, right? And so we're by coming into the Voxtur family and being independent, that's allowed for exponential growth, right? And so these are kind of the ways, we're looking at M&A. And so coming back to your question, Ralph, is that number is purely organic growth, right? And we're always going to be looking at acquisition targets. I'm not going to mention any names, but I've got a handful at least of acquisition targets that we would like to do. Some we may not get done because there's a disconnect on valuation. They need to be accretive to us. And just because a venture capital or a VC or a PE is offering you X, that's fine. We can't compete with that, right? Our valuation is being traded and is visual and crystallized on a daily basis, but some cool technologies, just to give you a bit of a flavor, what I'm referring to is there's a really cool data-based company, but that has applied AI technology that would provide a lender foresight or insight with, we're going through due diligence now, but with insight, 97% accuracy, whether a homeowner or a borrower is going to prepay their loan or default on their loan. And that type of insight, for a number of reasons, whether it's client retention or de-risk on a defaulted loan, is something that our clients are absolutely looking for. And they look to us because we're independent, right? They do what they do, whether it's origination, whether it's servicing, or whether it's trading loans. That's their forte. We are their independent experts that are the tech experts that they are able to leverage these type of insights. Another one, and I am going a little futuristic here, but we're looking at the piece of technology that is a loan origination system that is event-driven. It's built on distributed ledger technology. And what that means is, you're collecting it, it's auditable, it's event-driven, it's in a distributed ledger. And now the transaction post-origination, right? Post a mortgage origination, once it's sold to a servicer, whether it's sold to Fannie Mae, Freddie Mac, the large clients in the US, or a hedge fund that's looking to transact and do due diligence and trade, either buy it or sell it, that distributed ledger gives auditable, clear insight into all the occurrences on that piece of property or on that loan specifically. And so, there's a range of things out there that we're looking at, but I'd be lying if I didn't say we're constantly looking. And Voxtur's just, like our CEO says, we're just getting started.
Definitely see opportunities there, even with your data and working with EQ on some of the transactions they've been working on. But we got about 5 minutes here, and if we go over to Brandon, I guess in closing, give each of you a chance to highlight sort of the 3 key points, you want investors to take away from this panel, and sort of what you're looking at in 2022, that investors should focus on.
Yeah, thanks, Ralph, again, for having us. So the key things for us is that we've kind of hit the crossing the chasm spectrum. We've actually brought customers over on that right side here. And for 2022, for us, it's about scaling the business. We like to look at M&A. We continue to do that, as you can anticipate in this space. Is typically legacy. There's not a lot of AI, machine learning type of acquisitions. We did do one last year where we brought in some probability of exceeding stuff. We'll keep doing that, non-organic. We've got lots in the queue that we're trying to look for that. But really for us, it's about scaling the businesses and figuring out how to onboard more of these customers. And we have first mover advantage here, and we want to keep that. So we've hired a bunch of resources. We have a bunch of cash. So we're going to keep going as fast as we can to try to basically get new customer acquisition. These are multi-year contract agreements that we have with our customers, typically averaging about 5 years, with renewals that we've already done. So what we really want to do is expand, and we really focused on the US. So we've just got opened up Canada. We'll look at some Canadian operators there that we're in process with, and then international. We have an individual that's working in international. This problem happens to be worldwide. And then as we go and start looking, and we think we've got a really good handle on kind of just oil and gas, where we can transition our product into. So water, you mentioned water and sewage, same problem. There's more pipe out there. We probably look at the main line. It's a linear asset, so our algorithms will work on that quite well. And we are looking at what we would consider point data, meaning that lots of things around steel and metal and corrosion, and to be able to use those algorithms on growth of that. So, at some point, maybe we'll look at bridges or, that's things that are actually kind of point kind of centric data. But for now, we're really going to try to focus on scaling the business. We have really strong margins as a software company. Really, our only expense is our own development cost on Azure. Once we onboard a customer, they absorb that cost, so all of that just falls to the bottom line. So the more customers we can get at the top, the faster and the more net revenue is going to drop out of the bottom. Is what we're really focused on. So it's about customer acquisition for us in 2022.
Thank you for that. Geoff, how about EQ and sort of top 3 points for 2022?
Top 3 for us would be growth, expansion to the US, and partnerships. And I say growth because 21 for us was really, I think, was a really transitional year in the sense that as we started to push our data, our data revenue will have doubled year over year. New companies coming in, a lot of new clients, but I think the thing most exciting for us in that growth curve is really this year, if you look at the main verticals that we're in, automotive, insurance, financial services, retail, in each of those, we've got a client that we are currently working with that we're building from. So we have, some of the biggest names in automotive that we're currently working with. 2 out of the big banks in Canada we are working with. The biggest insurance companies we are working with. So we're going down that path. We have those, and really we did proof of concept this year. We did the integration work. We explained, and they could start to see the value that we provide. And just one example of that too. It's similar to Jordan, and maybe Jordan and I will connect after the panel. But we did something where we did have sort of a bank call us up and said, we have this influx of mortgages. We can't get to them fast enough. We're missing great opportunities. Can you help? And we built a system whereby, using the technology and using the data points, we could come up with a predictive modeling tool that could say, hey, this is going to be what you'd consider to be an A-ranked mortgage opportunity versus a D. So let's pursue that one hard and don't let that one lie. And let's let the Ds, the ones that aren't going to be profitable, fall to the wayside. So we've proved that out with some of the largest companies in the country, and that is going to be both sort of great foundation for us to grow next year, and also great references as we move into the US. I think US, we're doing some of that now organically. There is the opportunity for M&A expansion in there. So I think moving to the US will be a combination of organic and M&A. And partnerships, whether those be selling partnerships, other kinds of data partnerships, some fairly high level names that we're currently talking to. I think there's going to be some exciting sort of opportunities for us as we push into next year as well.
Okay, thank you for that. And over to you, Jordan, to close us out here today.
Yeah, thanks. Again, thanks for having me. This is a great panel, and I can't wait to download the Pay Me app for Geoff and start earning some rewards there. But Ralph, listen, you kind of alluded to it. We're absolutely laser focused on our growth strategy, right? We're doubling our revenues, and so we believe we need to execute on that because that is organic growth, and it's our turn. It's our time to now prove to the rest of our shareholders that we've done smart M&A. So that's number one. Number two, with that growth is increasing our margins, our gross margins here. And because some of these acquisitions have been more strategic in nature and coming into the Voxtur ecosystem, it's going to allow for greater gross margins in the sense that they're allowed to, or eventually in summary, kind of leverage economies of scale, whether it's leveraging our cloud environment, leveraging our finance, HR, the corporate functions, our own sales team. So we believe we have a strong focus as well internally on growing our gross margins to get up to, that 70, 80 kind of percent, that true best in class tech company gross margins. And then lastly, really our growth focus was in the US, and the byproduct of that growth focus being in the US is really getting pushed to being listed on the NASDAQ, right? And so I'm not here today saying we're doing that. What I'm saying is that from a shareholder base, we're getting pushed that way. We're getting a lot of interest from US banks because we ultimately are a US story now. 90+% of our revenues are now US based. And so that's great. It's really interesting. You need to, although, myself and Gary Yeoman, our executive chairman, and Jim Albertelli, we've lived in the capital markets. And so that's not a simple decision. You don't just move to, a New York Stock Exchange or a NASDAQ listing because someone tells you to. We've seen the failures, quite frankly, of people thinking just chasing that kind of listing or that, supposed investor base. So, we're always evaluating our options, but we're going to be very and extremely methodical about either making that decision and then ultimately who we partner with to do that, because you can't just do it on your own. So I think that's really it. We're a growth story. We're increasing our margins, and we're starting to look at and getting pushed towards more of a US listing as a result of our success and growth in the US.
Again, a huge thank you to our panelists and to the audience participating in today's panel. From a logistics perspective, OneSoft presents on Wednesday at 2 p.m. in track 3. EQ presents on Thursday at 10 a.m. in track 2, and Voxtur presents on Thursday also at 10:30 a.m. in track 2. And last but not least, if you want to learn more about these great companies, don't forget to book your one-on-one meetings. Again, I am a shareholder of EQ, and I am not a shareholder currently of OneSoft or Voxtur.
Well, thank you all for joining us today. I really do appreciate it. Have a great rest of the event.